This is Ag Matters PM from the Iowa Agribusiness Radio Network, brought to you by the Iowa Soybean Association, your daily recap of the information that affects Iowa's farmers, producers, and consumers, right here in the heart of the heartland. With reports from our award-winning broadcast team of Dustin Hoffman, Riley Smith, and Mark Magnuson. Now, from the IARN studios in Des Moines, here's Mark Magnuson.
Hello and welcome into Ag Matters PM on the Iowa Agribusiness Radio Network. I'm Mark Magnuson. Today is Friday, February 3rd, 2023. We're so glad you could join us for today's show. And in today's episode, I will visit with Mike Steenhoek. He is the Executive Director of the Soy Transportation Coalition. We'll also have a check of the weather, but first, let's run down the markets.
It's time now for the Ag Matters PM Closing Market Summary, your source for market analysis and settlement prices from the day's trade in Chicago, courtesy of the folks at agmarket.net.
At the end of another trading day, we are joined by Tyler Schau of agmarket.net. Tyler, a little bit of a strange day, some up and down in the markets, but what did you see today in the grain markets?
A lot of back and forth trading. Started the day pretty well. Actually came into the morning and the markets were under some pressure at that 7:45 break. When it opened up again at 8:30, we saw some strength in the markets. All of the commodity markets, or grains anyhow, were green and fairly strong till about mid-morning. There was kind of a reversal of the action, and corn was able to battle its way back and ended up positive on the day. Your March corn up 1 3/4 pennies. Beans just never could really get all that strength back, but didn't end up losing much, down a couple cents. Wheat was the one that had really the big reversal. The March Kansas City wheat at one point traded up to $8.90 and then had about a 20-cent reversal the other direction, settled back down around $8.72. So a lot of stuff going on. I think a lot of it had to do with the energy markets. Kind of the same thing went on there. At one point, we were almost up $2 on a barrel of oil, and right now, as we speak, we're down $2.50 in that crude oil contract. So some volatility coming into the market again, pushing stuff all over the place. Likely has to do a lot with these big funds sloshing money around.
Tyler, big picture, we recently saw the Fed increase the interest rate by 0.25%. What does that tell you then about where the Fed feels like we are at with inflation?
Well, I think, they thought they had it maybe under control. They had started the tapering process. A lot of people were looking forward to that. There was kind of there was a jobs report came out this morning, unemployment rate, I think at 3.4%. So unemployment rate is not coming up. And although that maybe sounds weird that the Fed would want a higher unemployment rate, that's one of the things that's leading to high inflation. So literally a day or two after Fed Chair Jerome Powell spoke, and it kind of made it sound like the Fed was getting, they were seeing the results they had expected. They come in with an unemployment rate that was a lot, in terms of people having jobs, was better than what was being expected, and just kind of put this inflation story back up in the forefront. So that might have a little bit to do with what was going on with the erratic behavior. I mean, and it happened across the board in the financial markets, in the energy markets, and in the grain markets as well.
Tyler, on the other side of the ag marketplace, what did you see in the livestock markets today?
The livestock, the cattle markets firmed up again today. Your feeder cattle markets were slightly better. I mean, not a big day, but anywhere from a dime to 50 cents a hundredweight higher. If you're a cow calf guy, backgrounder, going to run some stocker calves on grass this year, pay attention to that November 23 contract. I mean, we're up at $214 a hundredweight. Those are, prices. Could we go higher? Yes. I think a lot of that's going to depend on a lot of other factors, like are we able to bust this drought, and the macroeconomic factors as well. Either way you slice it, if you look at some of the different risk management strategies that are out there, you can lock in a pretty good price on a calf or a yearling steer or heifer come this fall. So I think it's one definitely those producers need to be paying attention to. Hogs are still struggling. Had a little bit of a positive day, but it's just like I think I mentioned earlier this week, production is still high, and until we slosh through that production and can see those supplies drop, it's just going to be tough to have a big bull market in the hogs.
Tyler, when we read some of the market commentary and analysis, we see some comments about packers versus the producers when it comes to livestock. What exactly are we talking about when we read those types of comments?
Well, in the pork space, the producers, the producers are the packers in a lot of cases. The vertical integration has taken hold, and those hogs are owned by the packers basically from birth till death. It's a little bit different in the cow-calf and the feedlot space. It's a little harder for them to concentrate quite like they've done in the poultry and the pork industry. But with different marketing arrangements, they call them AMAs, alternative marketing arrangements. It's allowed these large packers to essentially own these cattle and not have to go out and bid for them in the cash market. And what that does is it's a very small amount of fat cattle are actually killed on a cash basis, or I should say bought on a cash basis from the feedlots. A lot of them already have the contractual arrangements. So it gives the negotiating power to the packing houses. And I won't say they have total control of the market, but it's not a real transparent market. And that's one of the things that a lot of these beef groups, or cattle groups, I should say, cattle producers, NCBA, and the different cattlemen groups around the country are really trying to push for maybe just a little more of transparent pricing so that we have a little better idea of what the live animal should be worth when it exchanges hands.
That's a great point. We hear that transparent pricing. We hear those terms all of the time. Tyler Schau, our guest here at the close of the markets. Tyler, thanks so much for the analysis. How can our viewers get in touch for more great analysis?
Check out our website, agmarket.net. You can sign up for a 30-day trial of our Ag Intel. We publish a ton of intel, get it emailed directly to you. And if you want to call me direct, the number is 701-987-6009.
Thanks so much for the time on the show, Tyler, and have a great weekend.
You bet. You guys too.
That was Tyler Schau with agmarket.net. Let's turn our attention now to the closing numbers, courtesy of the folks at Bar Chart. March corn is up 2 1/4 at 677 1/2. New crop December corn is up 1 even at 596 even. March soybeans down 2 1/4 at 1532 even. New crop November soybeans down 3/4 cent at 1369 3/4. May soybean meal up $4.90 at 480.70. May soybean oil down $1.75 at 59.38. Chicago wheat down 3 3/4 at 768 1/4. Minneapolis wheat down 4 even at 914 3/4. Kansas hard red wheat down 7 1/2 at 866 1/4. May oats down 5 3/4 at 375 even. On the Merc, live cattle for February up 52 cents at 160.27. March feeder cattle up 17 cents at 186.10. February lean hogs down 32 cents at 75.02. February pork cutout down 47 cents at 82.50. And February Class 3 milk down 2 cents at 17.91. And that's been a check of the Ag Market Recap here on Ag Matters PM. We're going to go ahead and take a quick break to hear from our sponsor, the Iowa Soybean Association and the Soy Checkoff. And when we come back, I speak with Executive Director of the Soy Transportation Coalition, Mike Steenhoek. This is AMPM.
Iowa Soybean Association is driven to deliver for Iowa's 40,000 soybean farmers. We're proud to provide objective agronomic research, a helping hand with soil and water stewardship, and timely industry news powered by the Soybean Checkoff. Learn more at iasoybeans.com.
Welcome back to Ag Matters PM from the Iowa Agribusiness Radio Network. I'm Mark Magnuson. Today, I speak with Executive Director of the Soy Transportation Coalition, Mike Steenhoek. We're going to talk about the water levels of the Mississippi River, whether or not those are back to normal, and also the current state of the U.S. supply chain. Mark Magnuson on the Iowa Agribusiness Radio Network, and I'm joined today by Mike Steenhoek. He is the Executive Director of the Soy Transportation Coalition. Mike, the last time that we had spoke on camera, I believe, was basically right in the middle of when the Mississippi River had reached a very low point. The levels had continued to drop because of the lack of rain and moisture here in the Midwest, funneling into the river, and that was creating a lot of problems with traveling of the barges up and down the river and moving those products and goods. And how has that improved since then? Has it improved, and by how much?
Well, fortunately, we've seen some noticeable improvements since really the low water, extreme low water conditions which were in late October of last year, the Memphis, Tennessee, where the problem was one of the more acute areas of the entire inland waterway system, registered a negative 10.81 reading. And that's all in relation to an arbitrary river gauge, where the river gauge is at 0. And so a negative 10.81 feet was the lowest it got in Memphis. And fortunately, since then, we have had some periodic precipitation that has raised water levels. Today, we're at almost a positive 14 at Memphis, which is actually higher at this time than it was last year at the same time. So we have made some improvements. I think the message is that it still doesn't take a lot for us to return to low water conditions. We need to continue to have precipitation. We need to continue to have snowfall in those areas that really feed into the Mississippi, the Missouri rivers, the Illinois rivers, all of these rivers that all provide meaningful transportation for farmers. And so it's kind of analogous to, you had an accident on the interstate system and traffic came to a screeching halt. Now all of a sudden, maybe that accident has been removed. So technically the interstate is back up to normal, but that doesn't necessarily mean that traffic has resumed fully at full speed. It does take some time after that accident has been removed to actually return to regular traffic velocity. And it's kind of similar with the inland waterway system. We had some real significant trauma and disruption to the system. And so we're still hearing about shippers that are still struggling to get the kind of service that they need and expect. So it continues to take some time to return to normal.
So Mike, you had mentioned that the river levels have actually gone back up to where they are higher than they were at this point last year. So that's obviously great news. But just talking about in terms of the goods and the products that are moving on the Mississippi River, have we seen that tonnage number get back to where it was before?
Well, a lot of farmers, they responded to the low water conditions on the river, and also a number of barge terminals, by just holding on to the soybeans and the grain that they normally send. And so what you're seeing is there was a lot of deferrals of shipments. And so you're seeing a lot of that continue to catch up. And so, but then some of it did get more fed locally. Some of it did go to alternative destinations. So that's something that we're still trying to see what the total moral of the story was. But what we're happy about is we're seeing a resumption of service and more normal traffic conditions on the inland waterway system. And that's certainly good. During this time of the year, there are portions of the river that always is closed, usually the upper parts of the Mississippi River from December to March due to cold weather and scheduled maintenance. So the river is normally closed at that time. But again, very good news that we're seeing more normal kind of operations and transit along the inland waterway system.
Mike, when we talk about the big picture of the supply chain and moving goods and services across the country and out of the country, that was obviously a big disruption, was the inland waterway system and the Mississippi River specifically. But some of those other areas, do we still have some problems with, for example, shortages in trucking? Do we have issues that are still existing out there that are causing us to have to change how we do things a little bit? Or are we across the board getting closer back to status quo as far as the supply chain?
Labor is a continued struggle for all of the various modes of transportation. We continue to hear some of the challenges that our freight rail system is encountered. Now they have increased employment. They just reported over last year at this time, so they are making improvements, but there's still a lot of work to be done in that regard. Continue to hear challenges within the trucking sector. 78,000 truck driver shortage that's currently exists in this country. So it's one thing to have a truck, but you have to have a truck driver. It's one thing to have a locomotive, but you have to have an engineer. So we're seeing that throughout the system, and that continues to really beguile our multimodal transportation system. So we're obviously hopeful for some progress to be made in that regard. The fact that there is this labor shortage, it's one of those contributing factors to what I call infrastructure inflation, just the cost of whether it's building infrastructure or utilizing infrastructure. Labor is a big component of that, and it's just one of those additional things that's making it more and more expensive to move product from point A to point B.
And Mike, is that going to end up being maybe the biggest takeaway from this? Yes, we did not foresee COVID happening. We did not foresee some of the other black swan events that have taken place around the globe, but we now know that we need to make sure that we have multiple different avenues to be able to move things, transport goods across the country and again out of the country, because we can't just rely on one specific avenue.
Yeah, one of the topics that's increasingly generating traction when it comes to transportation infrastructure is kind of the well understood concept of don't put all your eggs in one basket. You need to have resiliency, and when you as a shipper, when you as a consumer of transportation service can avail yourself of multiple modes of transportation, multiple routes to get from point A to point B, you as a shipper stand to benefit. And that's something that we really need to continue to talk about, is having that diversity of supply chain, but also improving the resiliency of that supply chain, and making sure that we make those kind of investments to ensure that.
Mike, is there anything else you'd like to let us know about today when it comes to the supply chain trying to get all the way back up onto its feet, and just generally the situation right now across the United States?
Yeah, I mean, one of the topics that we'll just continue to hear more and more about is just the cost of building these new infrastructure projects. The good news is that we have additional funding, particularly from the federal government, to build a lot of these new lingering infrastructure projects that we've been pining for many years. But unfortunately, the purchasing power of a lot of that taxpayer funding is being eroded just simply due to the fact that all of these components are more and more expensive, whether it's steel, concrete, asphalt, fuel, machinery. Obviously, labor is a part of it as well. So this is something that we're going to continue to hear about during the course of 2023. Statements along the lines of, we originally planned to have this project done now, but now we're going to have to extend it into the future, or originally was going to cost this, and now we're going to have to revise that cost estimate upwards, all because it's more and more expensive to build some of these projects. And so one of my takeaways from that is that we would be well served if we don't just focus on the federal government, state government, and local government providing more money to solve our transportation challenges. We do need more levels of investment, and we'll continue to pursue that. But we also need to look at the cost side of the equation, and what are the opportunities we have to reduce the costs of building some of these critical assets. Because unfortunately, the reality is that government doesn't have a big enough checkbook to take care of all of these challenges, especially when you have cost inflation like we're seeing. So we have to try to find ways of being a better steward of the taxpayer dollars. That's something we really want to engage in this year.
He is Mike Steenhoek, the Executive Director of the Soy Transportation Coalition. Mike, thank you for your time as always. Always a lot of great information, and we hope to speak with you again soon.
Thanks, Mark. My pleasure.
That was Executive Director of the Soy Transportation Coalition, Mike Steenhoek. As for right now, let's take a look at the ag weather outlook. Well, when it comes to the weather, looks can certainly be deceiving. Right now outside, it looks like a very nice day until you step outside. Then it is very, very cold. But we do have some good news quickly coming up after tonight. Clouds will kind of burn off throughout the evening. Going to be very cold this evening as well, but then those temperatures start to turn around tomorrow to go along with some sunshine. We'll have a warming trend beginning on Saturday. So let's turn our attention now to the National Weather Service and what the National Weather Service has in store for the next 24 hours. As you can see from the National Weather Service, cold today, but plenty of sunshine. Widespread sunshine across the state of Iowa. High temperatures today from 8 to 27 degrees. Mostly clear and breezy this evening. Our low temperatures tonight will be from 4 degrees to 24. Tomorrow, warmer temps, partly sunny, and high temperatures in the 32 to 48 range as a warming trend begins tomorrow. And looking now at our affiliate weather map for tomorrow, Cherokee, partly sunny and 32 on Saturday. Shenandoah, sunny and 48 degrees. Des Moines, partly sunny with a high temperature around 42. Albia, sunny and 45. Waterloo, sunny on Saturday with a high temperature expected around 36. Clinton, partly sunny and a high around 38. For a more detailed forecast in your part of the state, make sure and check with your local Iowa Agribusiness Radio Network affiliate. And that's been a check of the Ag Weather Outlook. That also brings us to the end of this episode of Ag Matters PM. You can find all of our content on our website at iowaagnet.com. You can also follow us on social media on Facebook, Twitter, TikTok, and LinkedIn. And you can find our video content and previous episodes of AMPM on our YouTube channel. And don't forget our free twice daily market podcast on Apple, Amazon, Google, Spotify, and Podbean. From the IARN studios in Des Moines, I'm Mark Magnuson. On behalf of Dustin Huffman and Riley Smith, we thank you for watching. This has been Ag Matters PM.